Let's get more now on those two banks. HSBC thrashed forecasts with its earnings number, while Barclays talked of its very, very strong investment banking business. Let's head to London, where John Dawson has been following the story and the reaction. What's the latest, John?
Good morning to you, Alison. Yes, in fact, clearly very good reactions today. Good relief, in fact, for the banking industry overall. HSBC, first of all, the shares were actually low before the earnings came out about half an hour ago. And now actually they shot up, really rallying. The figures were absolutely fantastic as regards beating forecasts. Came in fact, for HSBC with a figure well above forecast. The shares, you can see, in fact, I'll show you this chart. Look at that rally. Up it goes there, dramatically rallying. It was down by 1%. Now it's one of the best performing banks, in fact, in Europe today. Came in with a number for net income of $3.35 billion on forecast for a loss. That shows you how dramatic it is, and the share price, you can see, really taking off. There on the screen for the banks you see today, HSBC rising by 6% at the moment. Barclays, of course, you mentioned yourself, Alison, about the very strong investment banking business, as Bob Diamond was telling us on Bloomberg TV this morning. Also, Barclays' figures themselves actually came in slightly below estimates, but what's encouraging for them also is consumer banking was clearly very encouraging. They're not going to pay a dividend, but so far, the Lehman's, they bought, of course, Lehman's operations back in September last year. That, according to Bob Diamond, he called it an outstanding franchise. Therefore, he's really encouraged by that. Shares, therefore, soaring in that one. And, of course, the two banks, they're also rising. With that, you also got UBS, of course. UBS today is rallying because, of course, of the Swiss tax fraud relief with, of course, the US government, also the Swiss government, both agreeing to push aside now. The shares, you can see, therefore, also ticking up by, in fact, 6.5%. So the three banks there, all with stories behind them. Two, of course, are earnings. Don't forget also that HSBC and Barclays did not go to the government for any help. And, of course, HSBC also has household business in the US. That, therefore, also beat the forecast. So, again, the US business is doing well. But HSBC also, in fact, concerns about their going forward. They do say, in fact, that the worst is not over yet. They're very cautious going forward. But the figures were so much better than forecast. The banks are clearly all across Europe today are really rallying. And that's clearly encouraging. Because last year it was quite different to this year. But still, the worst could be over. That's according to some of the banks this morning. But both banks today not going to the government, much better than forecast. Shares are rallying. Back to you.
Okay, John, thanks. Now